Here's the uncomfortable truth. Banks are using your money to get rich while you're working overtime to survive. You've been using a bank your entire life, but it was never yours. Every time you finance a car, swipe a credit card, take out a loan, you're making someone else rich. Banks don't just hold money. They use your deposits to lend to others, charge interest, recycle money, make profits repeatedly on the same dollar. That's called velocity of money. The problem? When you borrow from a bank, you pay interest. Your money stops working for you. Hi friends, Cloud and Skye here, reminding you to fetch wisdom, not just paychecks. Why do we work so hard, only to give their money away in interest? And that's where today gets serious. Now, let's talk about something most people were never taught. The system was never designed for you to win by default. And that's exactly what we're breaking down today. Retirement accounts? They lock your money away until you're almost 60. If you think the system was built for you, you haven't studied the system. Today, I'm going to show you how banks actually make money, why 401ks aren't the full solution, and how the wealthy use permanent life insurance as a financial tool with real data, not hype. God never designed you to live financially dependent, not on debt, not on fear, not on systems you don't control. Proverbs 22:7 says, "The borrower is servant to the lender." That means every time we rely heavily on debt, we give away power. But what if there was a way to build protection for your family, grow wealth responsibly, access capital without financial bondage, and steward money in alignment with biblical wisdom? Today, we're going to talk about how an indexed universal life policy, when properly structured, can help you become your own bank, not get rich quick. Biblical view of wealth and stewardship. First, we need to align spiritually. 1 Timothy 6:10 does not say money is evil. The love of money is the root of all kinds of evil. Money is a tool. Debt is a tool. Systems are tools. The question is, are you mastering money, or is money mastering you? Luke 16:10 says, "Whoever is faithful with little will be faithful with much." God cares about stewardship. And stewardship means protecting your family, avoiding unnecessary debt, multiplying wisely. When the system was built for institutions. Let's talk numbers. According to the Federal Reserve, U.S. household debt exceeds $17+ trillion. Credit card balances alone exceed $1 trillion. Average credit card interest rates are over 20%. That means Americans are paying billions in interest every year. Now ask yourself, who collects that interest? Banks. Here's what banks do. You deposit money. They lend it out at higher rates. They profit off the spread. They recycle the same dollar repeatedly. You pay interest. Your money stopped working for you. That's not financial strategy. The 401k illusion. Let's talk about the retirement solution. The 401k. Yes, it has benefits. But here's what most people don't understand. According to multiple retirement studies, nearly half of Americans approaching retirement have less than $250,000 saved. Many retirees rely heavily on Social Security. Why? Because a 401k is exposed full market downside, penalizes early access before 60, is fully taxable on withdrawal, depends on unknown future tax rates. And here's the bigger question. If taxes rise in the future, do you really want all your retirement money sitting in a taxable bucket? Diversification isn't just about assets. It's about tax strategy. What the wealthy actually do now. Here's where it gets interesting. Banks themselves hold billions in cash value life insurance. Why? Because it grows tax deferred, has protection features, offers liquidity, is not directly exposed to market losses. It's a capital efficiency strategy. And here's what most people never hear. Permanent life insurance, when structured properly, can function as your own private financing system. You build cash value. You borrow against it. Your money continues earning interest. How it becomes your own bank. Let's say you put in $20,000 per year. Over time, the policy builds cash value. Now, instead of financing a car through a dealership, using a bank loan, putting it on a high-interest credit card, you borrow against your IUL cash value. Here's the magic. Your money continues earning interest even while you're using it. You're borrowing from the insurance company, using your policy as collateral. So your capital keeps compounding. This is called non-interruptible compounding. Banks have done this forever. Now you can too. IUL versus 401k versus bank, clear comparison. Let's simplify it. Bank growth. Minimal 0.1% interest in savings. Access. Easy tax. Fully taxable interest. Leverage. You pay the bank. You're the customer. 401k. Growth. Market-based access. Restricted taxable later. Downside risk. Yes, you're the investor. But you don't control timing or tax policy. Indexed universal life. Properly designed. Growth. Linked to index performance. Downside protection. Often 0% floor. You don't lose money during market downturns. Tax-deferred growth. Access. Policy loans, if structured correctly. Protection. Built-in death benefit. You're the controller. Is IUL perfect? No. It requires long-term funding, proper structure, discipline, understanding costs, and it's not ideal for short-term money, low-income, unstable situations, people unwilling to commit. But neither is real estate. Neither is business. Neither is investing. Every powerful tool requires discipline. Why this is controversial? Because it challenges the norm. The financial industry often pushes mutual funds, retirement accounts, market exposure. Why? Because that's where assets are gathered. But permanent life insurance, it doesn't fit the typical investment sales model, so most people never hear about it correctly structured, not optimized, not designed for cash accumulation, just basic protection. There's a difference. The middle class saves, but the wealthy strategize. The wealthy control. If you want to, build tax-advantaged liquidity, protect your family, think like institutions, then maybe it's time to study how this works. Not blindly, not emotionally, strategically, because the system isn't broken. It just wasn't designed for those who don't understand it. And once you understand it, you stop playing small. This strategy is not a shortcut, a replacement for emergency savings, a magic solution. It requires discipline. Proverbs 24:3 says, "By wisdom a house is built, and through understanding it is established." Wisdom first, then strategy. When you control your finance and legacy, you reduce financial stress, you reduce dependence, you increase peace, and peace matters. Philippians 4:6-7 reminds us, do not be anxious about anything. Financial anxiety often comes from lack of control. Ownership reduces anxiety. Stewardship increases confidence. If you're serious about building wealth biblically, protecting your family, creating tax-advantaged growth, then maybe it's time to understand how to implement this correctly. Not everyone needs an IUL, but everyone needs a strategy. Pray about it. Seek counsel. Study. Then decide. Because the goal isn't just wealth, it's stewardship. And when you steward well, you honor God with your resources. Thank you for watching. Follow for more financial strategy content.